let's talk about some yields though, because markets are doing good. Hopefully whoever's watching this feels good about that aspect of portfolio growth. In the meantime, other things are happening. Like we were looking at this earlier this week. Uni Chain is spending a whole bunch of money to, I think, get people over on their chain. So we're just seeing, like, if you look at these APRs, we can sort by APR. But yeah, I mean, some of these are ridiculous. And you know what? Let's start by daily rewards, because then we'll get like what is more reasonable. $89,000 in.
So that's this weird thing, which I don't know a whole ton about. I think it's Turtle Club, and it's like a USD vault, and they're offering like 46%. To be honest, I don't know a ton about this, but like it's a tech point.
Is that a tokenized point?
I don't know enough about this. I know a ton about the Uni Chain stuff. I don't know a ton about Turtle Club. But if you just the next one, 83% ETH USDC,
$47,000 in Uni daily.
Yeah, it's sizable. And the one below it, like again, like another $45,000 a day in Uni. You even have the USDC pool, which is like a couple. Yeah, that one right there. Almost 14%.
Now, one of the things to remember here is that this is spread size width dependent. What's the word looking for? It's range. There we go. It's range dependent. So can you explain what that means?
Yes.
Welcome to today's Dojo Pod. It looks like we're about to do the bullish crossing on the EMAs here with the weekly, almost hitting 90K for the first time since, I mean, I guess technically maybe we pinged it back in March, but we were really sort of up there back in like super early March. This is great. This is nice. I am mostly unstable, so it feels way less good than it could be feeling. But I'm hoping it's not I'm hoping it's a bull trap, because, you know, we're getting signals that it might not be. So congratulations to you for white knuckling through the downturn here. How you feeling?
I'm feeling good. You know, I feel like the last couple of weeks have been pretty rough. I've been trying to like weather the storm, just focusing on yield farming and not focusing on price too much. So I'm feeling a little disconnected to, you know, macro and the you know, kind of broader scope of what all is going on. I don't know what's causing this rally. Like I wish I was more kind of keyed in to looking at this and being like, oh yes, of course, this is because of XYZ thing. But I'm just happy that the prices are going up. I mean, you know, Bitcoin is definitely kind of leading the way. It seems like it's been very strong. Most other, you know, alts, even stuff like Solana, ETH, have not really reacted as much as you know, like Bitcoin has. I mean, ETH is still at 1600, so like I don't know exactly where that puts us on the ETH BTC ratio, but ain't good. That ain't good. Sol's not so bad, 142. You know, like that's not terrible, but I think it is still, relatively speaking, quite a bit down, much more so than BTC. You do have funny things like, you know, I've never been a big fan of the farts, but the farts are rising. Hot air is rising. It's at over $1. It's about $1.10 on Fartcoin, and it got down all the way to like 23 cents or something insane like that. So it's up 4x from the bottom. I wish I was a big enjoyer of those things, but shout out to, you know, Taiki and anyone else who, you know, is a big enjoyer of stinky air. So, and I don't know
if you ended up like sidelined like me at the Pico bottom. So congratulations us. Then hopefully this positive price action will allow some of the yields to go up as well. So that's one of the like tangential benefits, is that when we hit bullish conditions and tokens start to rise, especially like emissions tokens, more interest rates sort of fluctuate to the benefit of yield farmers, we can get, you know, instead of like a 10 to 15% APR in stablecoins, maybe a 15 to 30%. So there are benefits, though certainly it would have felt better to be more long than I am, which is like 1% of my portfolio.
Yeah, I think the yields part is a really good point. I mean, yields have definitely been ground down. Like there still are opportunities out there for like the discerning yields farmer. There have been opportunities consistently, but just across the board, yields are down. You do see, you know, some of these things popping up. Like alts are definitely not like going stratospheric, except for something like, you know, like Fartcoin. But, you know, even just a little bit of relief on some of the things like the bears of the world. I don't know. I think Babylon's going to start doing a big campaign. So like it helps the babies up a bit.
That is literally a parabolic curve.
And gold. Yeah. When do we start getting gold incentives, Steven? Are there any gold strategies?
About this in the dojo, which is like, how does one get yield on gold? And there are ways. I mean, it's not impossible. So, thank goodness for DeFi because it allows you to do things that you probably otherwise couldn't do. I mean, I guess if you were in TradFi and you had a lot of paper gold in your account, you could probably borrow against it at like roughly the FFR or something. So like 4 something, 5 something percent, which is not great. It's pretty terrible. But in DeFi, yeah, look at that curve. In DeFi, you can go over to like, there's actually a lot of people building gold, which is great. I think this gold rush or whatever you want to call it, this gold season has incentivized a lot of builders to pivot to maybe building, like there's 200 plus new stablecoins. So people want yield on gold, which makes a lot of sense. So if you go over to Morpho, PAX G, which is probably the biggest, has to be the biggest gold, on-chain issue gold, I imagine. Oh, look, they opened up a new
I think
market.
the Tether one is the biggest. But yes, this is like the second biggest.
Am I on the wrong chain? Because this is like, no, Borrow, that's why. Okay, there we go. All right, PAX. Here we go, PAX G. There's $2.6 million of PayPal USD to borrow against it. So, not an insane infinite amount, but still $2 million is pretty good. And the borrow rate is incredibly good. So 2.6%. So basically, you can go up to like 77% LTV, which is not super crazy, but it's gold. It's not a dollar, so it's not going to be one-to-one correlated. There is some risk. So they give you, conservative LTV here, but let's just say you're 50% LTV. So you got your gold, hopefully it continues to rise. You're borrowing 50% against that. You can go get a yield on that with stable coins. Maybe you're getting, I think 15 to 20% is reasonable. Let's say you get 20%. Let's be bullish. You take the 20%, you net the borrow cost, so -2. It's 18%. Multiplied by your LTV, so cut it in half. It's 9% APR on gold. That's not bad.
Yeah, not bad at all. Do they have the Tether version of it? I think that one's very big as well.
Do you know the name of it? Is it Tau or is it Tether?
It's
AU or something?
It's XAUT.
XAUT. XAU. Wait,
Yeah.
look at you. Okay, and there's not as much liquidity, exact same LTV, but you can short, right? You can borrow USDT, USDQ, USDR, ZAUM. That's Curve USD. See, you're borrowing gold, I guess. There, XAUM must be some sort of gold derivative. Not a ton of liquidity, but it is another option. So yeah, thanks for illuminating that.
Yeah. I think that they're really trying to emphasize it. I mean, I personally would not go levered long gold at this price. I mean, we are at all-time highs every week.
It's different than purchasing it and neutrally yielding on it.
Yes, no, of course. And that's what I was going to say, is that I think that making your gold productive is great. Also, gold's like such a weird, asset where it's a physical thing that someone actually has to custody, and there is a real cost to doing that. And so in the real world, and by real world I mean TradFi, there's significant costs that people have to pay for having their gold custodied, many bips a year. So if you can find a way to get paid to hold gold, it's pretty attractive, right? I mean, especially for the gold bugs out there, right? Who are used to having to either physically custody it, which is kind of a nightmare, or pay someone else to custody it, which is just, painful when you have to pay for holding an asset essentially. So I think we're going to see probably a lot more of gold in DeFi. Hopefully we can start seeing some yields on it, and maybe that'll draw some of the old gold bugs in. And who knows, maybe PAX G or the Tether gold thing will be the real digital gold, and we won't need Bitcoin anymore.
Gold, so, I hope not. I do think there are fundamental, literally fundamental differences between BTC and gold. But I was having this argument yesterday because someone was poo-pooing gold, and I was like, well, what makes Bitcoin so much better? And they had some good points. But I agree. Hopefully we see more gold on chain. It's good to see it. I will remind people that, gold can have 4-year spans of nothing or chop or even downward for 2.5 years. It's not like this up only inflation hedge, because inflation just continues. Inflation doesn't really ever go away. We haven't seen deflation I can't even remember when we saw deflation. But we have. It's not it never happens, but it's very, very rare. So it is an inflation hedge, but it's an imperfect inflation hedge. It's not like a 1-to-1. It's not like FPI, which aims to always grow at the rate of inflation. It's a cool asset. If you want to diversify, clearly it would have been the right choice this year, but it is rarely the choice overall. Rarely does gold beat the S&P 500. Only typically right before we're going to have a very weak dollar or some sort of economic hardship does gold tend to do this. So, If you were looking for more indicators that maybe a recession's ahead, or maybe we're going to see some weird times economically or financially, I think gold shooting up like this is one of them. It's a pretty decent indicator, leading indicator of that kind of stuff. But
It also has
weakness.
Yeah, it also has pretty strong like sell-offs. I mean, if you look at that, like it looks like it definitely, relatively speaking, has these big run-ups, and then like has multi-year periods where it sells off. So
yeah,
I agree with you. I think
blow off tops.
Yeah, it definitely, I mean, for an asset that typically moves pretty slow, it has blow off tops. Crypto wise, this is pretty tame, but still buying the Pico top on something could be painful. But who knows? Maybe we'll continue to have wonky stuff going on in the economy, and this can push up a little bit higher. Regardless, I think having more real world assets on chain, like gold, stocks, things other than like treasury bills. I mean, I like treasury bills. There's obviously been a ton of strategies with like treasury bills plus points, which have been fantastic. But the more we can actually have useful things on chain, the happier I am.
Yeah, I agree. Exactly. I mean, it's cool to have it. And if we can get yield bearing gold, that'll be a lot of fun, because it's just, it's a way to have assets that are doing something. Active assets is more fun than stagnant assets, in my opinion. Though holding gold is also cool. But let's talk about some yields though, because markets are doing good. Hopefully whoever's watching this feels good about that aspect of portfolio growth. In the meantime, other things are happening. Like, we were looking at this earlier this week. Uni Chain is spending a whole bunch of money to, I think, get people over on their chain. So we're just seeing, like, if you look at these APRs, we can sort by APR. But yeah, I mean, some of these are ridiculous. And you know what? Let's sort by daily rewards, because then we'll get like what is more reasonable. Yeah. $89,000 in.
So that's this weird thing, which I don't know a whole ton about. I think it's Turtle Club, and it's like a USD vault, and they're offering like 46%. To be honest, I don't know a ton about this, but like it's a tech point.
Is that a tokenized point?
I don't know enough about this. I know a ton about the Uni Chain stuff. Sure. I don't know a ton about Turtle Club. But if you just the
next one, 83% ETH USDC, $47,000 in Uni daily.
Yeah, it's sizable. And the one below it, like again, like another $45,000 a day in Uni. You even have the USDC pool, which is like a couple. Yeah, that one right there, almost 14%.
Now, one of the things to remember here is that this is spread size width dependent. What's the word I'm looking for? It's range. There we go. It's range dependent. So can you explain what that means?
Yes. Yeah, absolutely. So essentially what it means is, so the way you participate in this, just to be, start off with the basics, is you need to go to Uni Chain, which is part of the Optimism stack. You can, there's like the super chain bridge, you can use that. There's some other bridges you can use. And then literally all you have to do is LP USDC, and then this new USDT0, which is like the on the chain.
Is part of the super chain stack?
Yeah, it's part of Optimism. Yeah, it's part of the Optimism stack. Similar as Base, or similar as
Super Bridge or whatever.
Yeah, exactly. So it's like similar to Base or to Optimism or Mode, or I don't know. There's a bunch of them, right? And basically all I have to do is you have to come in like bridge over here and then LP it. It's USDC against USDT0 in a 1% fee range.
USDT.
Yes, exactly. And there's a ton of liquidity doing this. I mean, there is almost $107 million in this pool. And so the average of that, the APR that's average, is like 14.5%. Now, this is a competitive game, and it is not something where you can just go and you can passively LP some super wide range and expect to get that. And the reason is because they are determining the amount of Uni tokens that you're getting based off of the fees that your LP is generating, right?
Right.
So the people that are more concentrated will earn more incentives. And so basically, this is just a rush to the bottom where people are incentivized to get super duper tight, even to a single tick, even to like maybe just 2 ticks or something like that. And, the people that are doing that are getting many multiples of 14%, because if you look at
rebalancing and getting chopped up, maybe. Well, I mean, I guess with like USDT, USDC, it's not as bad. But if you're doing ETH BTC or ETH USDT, which is going to have even more volatility, and you're trying to tick snipe, you could get shredded.
Oh, you would definitely get shredded. I mean, with that one, I think you need to be in a more wide pair. But for the assets that are essentially like USDC, USDT, or there's also wrap staked ETH, and there's also ETH paired with EtherFi ETH, just a little bit further down if you can see those. Those ones you could reasonably tick snipe. And the reason you can do that is also because swapping in and out is so cheap. There's so much liquidity to move in and out of these pairs, it only costs 1 BIP to make a swap, and you can get essentially 1-to-1 pricing even on very large size. It's possible, to be doing this. I've been doing it for the past couple of weeks. It's been great. I mean, the peg has moved around quite a bit, and by moved around quite a bit, I mean it's moved around like 6 or 7 bips in either direction, which is not very much in real terms, but when you're doing a single tick pool, can be quite a bit. So I would say this is one for people who have quite a bit of time, can pay attention to this stuff, and like maybe even set up a monitor. When they go out of range, they need to go back and immediately, like fix their range. The other thing is, this is Uniswap V4, and so they're really trying to bring people into the V4 with hooks and stuff. Honestly, these pools don't
set rebalancing things in V4.
I think theoretically you can. Maybe it needs like a third-party hook to do it, and I'm not using that. Maybe someone else is using that. But this is the introduction to bringing a lot of liquidity over to V4, and that's why they're paying so much. But the thing I will say is, like, the Uniswap front end, which is the only way to interact with this right now at the moment, is very bad. I mean, it's shockingly bad.
I thought you were about to.
No, it's like very hard to create a pool. Like the front end used to work quite well in terms of like trying to LP and being able to get very kind of into the minutia of positions. Now it's much less so. Also,
already
they have this
kind of ridiculous.
Yeah, they also have this bug on the front end where you cannot deposit a full amount to the pool. It only lets you deposit like about a third of your liquidity at any time. So if you're depositing, say, I don't know, $10,000, it'll at most let you deposit, 3,300, and then you can do another third and another third and another third until you get to a very small amount. But it is very frustrating on that sense and takes a lot of time, to like deposit into a position. If you want to get like, 95, 98% of your liquidity in there, you probably have to do 15 transactions. So
this is one of the things that I noticed is like, there's nowhere for me to choose my chain.
There is, it's on the asset that you're doing. So if you are connected and you click on there, then it's telling you like,
if you're okay.
Yeah, these are all, you don't have any of these assets. Otherwise they would just like automatically populate, or you can like force choose it. Yeah. So anyway, it's been great. I mean, for people that are like active LPers, this is the place to be doing it right now. But it is very frustrating,
right? You can't just like go into any fee tier and expect to get those rewards.
No, you have to be in the right fee tier for sure. You have to be on the right chain. You have to be using the right assets. It's confusing because there's a few different versions of some of these assets as well. But yeah, if you're farming like, USDC Bitcoin, great place to be doing it. If you're doing, ETH pairs, great place to be doing it. Stablecoins, great place.
I was going to say USDC Bitcoin or USDT Bitcoin at 166% average is nuts.
Yeah. Because that's a lot of incentives, right? I mean, it's what was the daily amount of incentives?
It was something like 35K, 36K.
On less than $8 million of TVL. So that's a lot, and like you don't need to be insanely tight for this one because Bitcoin is volatile, right? So like no one is quite tick sniping it. And maybe people have bots and are doing it, but that would definitely be a way to get torn up if you're doing it on like that mixed up pair.
If right now, you're looking at the markets, maybe like me, you're like, man, I wish I was engaged in the markets, right? I wish that I had some more exposure, but I'm not. Maybe this is a bull trap. Maybe it's not. Maybe we're about to restart. And you're not really sure. This could be a good alternative. This is like getting your toes wet back into the market because you could set a range where you're like, okay, well, you know what? I'm fine rebuying Bitcoin or like being back into Bitcoin if it goes down to like 82K or like 80K. You can put the bottom of your range there and you're like, you know what? And hey, if I'm buying it at 90 and selling it at 95, fine. Put the top of your range there. And maybe you're not going to get 166% APR because other people are tighter, but maybe you're getting 40% APR on that while being in that range and sort of expressing your thesis. And if it goes up, hey, you had some exposure, maybe you got out, but look at you. Now you gain maybe 10% ROI, 13% ROI. But at the same time, had you been like doing a stablecoin play, it would have taken you half of a year to get 10% ROI. So, and it maybe if it goes down, at least you made some additional yield in Uni that you could have compounded into BTC. So I think this is I'm selling myself is what I'm doing. I'm like, hyping myself up for potentially entering in this later. It would suck to buy BTC when it's like shooting up, but I think this is one way to potentially do it.
It's also a great way to be long volatility, be getting paid a pretty high APR in doing this. Yeah, I think that's there's a lot of strategies you could do that could do this. I think you would probably want to be pretty wide. The other kind of frustrating thing is like the Uniswap front end doesn't really show very well the amount of liquidity and like the shape of it. You can kind of see it if you like go and like look at the pools and stuff, but they used to have a great info page and for some reason they killed it.
Info about Uniswap.
Yeah, some reason they killed that, and now it's just like less good.
Autou.
So Autou is not on here. I've been like pestering them and like trying to get them to come over and do it. They may come over for the Uniswap V3 pools, but they have not built out their, way of interacting with V4 pools. So the only way to, as far as I know, to interact with V4 pools is through the Uniswap front end. If anyone who's listening to this knows another way of doing it, please let me know. I would love to know that. But I've been researching and talking to people, and it seems like there's no way of interacting with V4 other than Uniswap, which is subpar. So
yeah, because like the massive benefit. Well, actually, let's talk about this. The massive benefit of being able to see the range or the liquidity structure or whatever the liquidity profile, I think is the phrase we use, is that you can then you can really estimate your APR with way more accuracy and see how competitive each pair is and whether or not it's even worth getting in that. So let's look at Kodiak. I think Kodiak is a great example of this. And for like, Kodiak did a better job than Uniswap, which is hilarious. But like, if you go to Kodiak and then click on, top V3 pools, so this is liquidity and then custom V3 and then top V3 pools, you can, and then search for a pair. We're going to look at wrap Bitcoin sol BTC because this is actually pretty interesting. You will see a liquidity profile. So this is each tick or bin, I guess, if you're natively from AVAX or something, even though I guess technically, well, no, ticks, bin, same basic thing. So here you can see if you squint your eyes just right, that it says there is 1.13 sol BTC locked here. So like this tick currently is all sol BTC. So it's 1.13 sol BTC. The tick over, it's going to be all wrap Bitcoin, right? Because it's like, if you're right here, this is, theoretically there could be a mixture, but like any tick to the left is going to be all one asset. Any tick to the right is going to be the other asset. And it's like an order book, right? And it goes back and forth. So here we have 1.13 sol BTC. Over here we have 1.11 sol BTC. And over here we have 1.11 wrap Bitcoin. So that's a 3-tick range, right? You can see that people are clearly boosting this one tick a little bit higher. But if we assume we had a 3-tick spread, so that's 1.1 plus 1.13 plus 1.11, let's call that 3.3, right? 3.35. That's 3.35 Bitcoin. So it's roughly 270K. And we have $150 of fees. So we take $150 of fees, you multiply that by 365, you get roughly $56,000. And then you divide that by the amount of money in these 3 ticks, which is, roughly $270,000. That's a 21% APR. So that's pretty good. That's 21% APR for being in a 3-tick range on wrap Bitcoin, sol BTC. And, I think it's relatively reasonable to expect the price to stay within 3, maybe 4 ticks. So, but what we're saying is you can't do this with Uni V4. You can do it with Kodiak. You used to already do it with Uniswap V3. And actually you still can on Autou Trade with Uni V3, but you're kind of flying blind here on V4.
Well, with V4, I just sent you a link here in the chat about it. You can kind of see it. The problem is it just doesn't really work very well, right? So like I sent you the link here. Yeah, like you can kind of see it if you go and you like click on the liquidity side. It shows you the distribution of liquidity. You're right now on volume. So if you switch over to liquidity down in the bottom right underneath the chart there. Yeah, there.
So that's not too bad. Wow.
But like it doesn't show you the active tick, for example, right? Like you can't zoom in. You can't like really look at a lot of like things. Also like, I don't know. It's okay. It's just like it used to be really good.
It's not showing me what tick it is. It's just showing me the shape.
Well, it shows you the pricing above. Like if you go look above where it says one kind of like. Anyway, it's confusing.
Oh yeah, one Bitcoin. I see. 1 Bitcoin equals. Yeah. Okay, so it does kind of show you. That's not too bad. It's not terrible.
No, this works okay. I mean, and if you wanted, you can see here that like liquidity is relatively concentrated, but it's not insanely concentrated.
And it probably was here yesterday. This is probably roughly 88K. Now we're pushing into 89K, and so it's moved through this. This is what probably 86 to 88. What's that? 2 out of. That's kind of like a 2% plus or minus spread, maybe a 1.5. That's really tight range.
Yeah. So, I mean, you can at least get a sense of it. I think the worst issue is this like depositing one where you can only deposit a third of your liquidity at a time. It's just because their front end's broken and like that's how transactions get generated. Oh yeah. They know about this. Like
this is Achilles. Is it Achilles problem or whatever? Archimedes? I forget. It's the one where you can never run the full distance.
Yeah.
Because you can only run a third of the way each time. So like, if let's say you had $90, first you spend 30, then, 30% of 60 is 20, then 30% of 40 is like 12 or something. You can only ever spend a third of what you have.
It's like, I mean, I do like 15 transactions and I get about, that's how it works. I never quite get all my
75%
liquidity
in
in.
or something.
Yeah. No, I mean, I get probably like 95, even 98% in, just because like I'll sit there and do it and it's like worth it because like there's high incentives, but
That is frustrating.
it's a pain. And then if you imagine that like the peg is moving pretty rapidly on like the stablecoin pairs that I'm in, and I have to do this like multiple times a
goodness.
week.
Yeah, rebalancing would be such a pain.
It is. But it's also one of those things where like typically in DeFi, when something's painful to do it, people don't,
Get outside
right?
returns.
And so if you're willing to put in the effort, you know, you can actually
Paying
get
premium.
exactly. That's exactly what this is. So like at first it was like super crowded, and as the peg has moved, and there's people that are like pushing the peg around because they don't want people just to be like completely passive. You know, there's been fewer and fewer competitors. So like the APR has been actually going up because people are either one, not paying attention to it, or two, too lazy to kind of move around and like be an active LP. So anyway,
Metaphor for life, man.
it is. It really is. It's just DeFi is a metaphor for life.
I feel that way a lot. Let's talk about Bear. I mean, there's so many things that are interesting and popping up. So like one, go check out Merkle. There's a lot of incentives flowing. If you're willing to farm that paying premium, hey, maybe it's a good play. And actually, what was that? Was this info.uni? How did you find that? I'll try.
You go to Explore,
purchase from the app and then Explore.
Yeah, and then you go to pools and you can click on the pool you want.
Yeah. Cool. I guess that's relatively easy.
But then you also have to choose the chain. So like you're now on Ethereum, I think. So if you go,
Is that Ethereum?
No, that's Uni Chain. Yeah, you're on the right one. Yeah, that's right.
And then liquidity. Yeah, that's super wild. Look at that. Super. People are assuming there's going to be. Maybe
this is just wrong though. That's not actually what it looks like. So this is an example of it like not working because there is liquidity on further up.
Oh, it also is not telling me how much is in there.
Yeah. So that's what I'm saying. It is wonk. Like that Bitcoin one is working better than this is, for example, working.
Yeah, it's got a bit of wonk to it.
Yeah. Yeah, like all good things in DeFi.
That's right. Okay, so we were talking about Barchain because there's like this. Well, there's a lot to it. So let's break down what the only thing that I'm really sort of focused on or interested in is Nectar, and I'll show you why. First, let's look at the peg there. So the peg's a little bit, like we said, there's all good things in DeFi have a bit of wonk to them. This is definitely a wonky peg. It's technically overpeg right now, so congratulations, Nectar, for that. Nectar, or Barchain, is a liquidity fork. I think it's technically liquidity v2, or they're going to migrate to liquidity v2. Maybe they start off as liquidity v1. I'm not entirely sure. It's liquidity fork. And Nectar is the stablecoin asset issued against the collateral on there. So for those of you who don't know, liquidity forks, you collateralize an asset and then you mint. It's a CDP protocol. Then you mint the stablecoin against it, and then you can deposit that in the stability pool. And if there are liquidations, what happens is the stability pool of Nectar will liquidate the assets at a premium, and you will get those assets at a severe discount in exchange for the Nectar in the stability pool. So if you're in the stability pool, there's always a risk that you might end up being redeemed for some underlying assets. Now, they have made the stability pool liquid, called it staked Nectar, and it has a really high APR. So it has this APY, sorry. That's actually, there's gonna be a big difference there. 68%. Yesterday, this APY was 77%. So it is definitely going down and it's like fluctuating. It was over 100%, I think, 2 weeks ago. And let's do a quick bit of math. That's ln1 plus 0.668, which is, so that's really 52% APR. Which, they're not terrible. This is auto compounding on infrared. Now, usually the way this works for these liquidity forks is that the stability pool is getting fees from minting, right? Minting the stable coins, and from interest from holding or like borrowing that minted asset. And in this, it doesn't seem that like that's the case at all, because 100% of this yield is, if I can find it, coming from, 50% is coming from IBGT. So we were sort of theorizing that what might be happening is they're taking all of the fees from this platform. By the way, this platform has a lot of fees. Like they're beating you up with those fees on this platform. I like the protocol, but like they take their fees pretty seriously. My assumption is they're taking those fees and using that to bribe for BGT emissions. Which, hey, totally fine thing to do. I think it's a really cool system. But that's sort of like, it's probably easily confirmable just by asking the team. But that's what I'm assuming that they're doing. And so before you ape into this stablecoin thinking, hey, I'm about to go get 70% APY, do know, if we go over to, it's such a weird place to put this. It's in dashboards. Do know if you're going to deposit into the stability pool, there's a 1.5% deposit fee and a 0.3% withdrawal fee. That's steep, right? That's like 30 days of being in that pool to recover just that.
Yeah, that's the reason that turns me off. Part of the reason that this has such a high APR is because they have such high fees, but paying almost 2% to get in and out of this position.
I mean, it's 13 days, so I over exaggerated.
Yeah, but that's if the APR stays this high. I mean, you see it's kind of in a negative trend. The reason it's in a negative trend is if you go look at the price of Barra, or maybe don't look because it's not pretty.
Yeah, it's not good.
It's $3.50 down from almost $7.50, about 30 days ago. So it's pretty brutal. And so this one suffers as Barra goes down.
This is not Barra.
No, maybe one on Kodiak.
Barra. This will probably. I mean, Dex Screener has so many issues. Why not let me sort by chain?
Yeah, Dex Screener used to be one of my favorite tools, and now it is kind of the bane of my existence. You can go and click here, but still, it's I
how
just
do I
want to
search?
Yeah, it's really, if you go to I don't know, CoinMarketCap or CoinGecko or something like that, you can more easily find it.
I'm sure Barra is here somewhere. You would think if I go to volume, right? You would think it's one of the top. Barra. Oh my gosh, this is so painful. Barra is Barra not even one of the top voluminous
I think that
assets?
That doesn't make sense to me. I don't understand how that could be true. Hey, there it is. Oh, no, Barra. No, that's not right. I don't know.
You know what? Better do wrap Barra. There's probably not a bunch of wrapped Barra that are, here we go. Okay, that's better. So wrap Barra, $1 million of volume. This will work.
Okay. So basically, yeah. So you can see that. I mean, that looks brutal, right? And so this, because it's a dollar denominated vault or asset, it's could be even getting increasing amounts of Barra, but the APR is going down because we've had this 60% drop in Barra price, which is the opposite to something like IBGT. So that's where you're of course exposed to Barra, and the APRs have actually been going up because that's denominated in Barra and you're getting rewards, some in Barra and then a lot in Honey, which is the stable coin.
I mean, in dollar terms, it's not really going up, but in Barra terms, it is.
No, I mean the reward that you're receiving. So if you go to infrared and you look at the APRs, the APR for that has not dropped. It's been very consistent. Whereas the APR for this is going down because the price of Barra is going down.
Exactly, right. Because your position is denominated in a decreasing asset, the yield is increasing relative to that. Right. Yeah, it's my internet. I swear, I have the fanciest internet. It's my download fantastic. My upload speed terrible.
And that's why we see, for example, this is still at a 62% premiums.
Yeah.
So people that have been playing this, doing pretty well. I mean, you can see here Steven was trying to aim for, between 10 bips and 40, 50%. It's consistently been above a 50% premium. So congrats to those who
premium.
Wow. Yeah, that's insane. I would imagine it continues to come down as if Barra continues to depreciate in value. I don't know. It'd be interesting to see how this plays out.
Yeah, I mean, the yields are good. I think that's one argument for it. We're also going to see POL go live soon. In fact, have we seen it go live yet?
POL is live. Yeah, of course. It's definitely live.
POL is just BGT emissions, period. But we're going to see POL on Dolomite soon with Dr. USD, which we haven't seen yet.
Well, it is live on for example, the RUSD honey pool is an example of POL. POL just means that the protocols are paying bribes to the validators to direct emissions at their pools. And that's been happening for, wow, my DeFi brain doesn't do time very well, but I want to say a month or something like that. And we're seeing it expand. So the exciting part is, and maybe this will bring more energy back to Barchain, but we'll see even more kind of exotic types of POL. So for example, what Steven's saying here is the deposit asset on Dolomite for Reservoir USD, which is RUSD.
Oh, I'm negative now. What happened?
We'll have an underlying yield.
Exiting 4.8? No, how is that negative? 4.8%? The yield of SRUSD is 0. Okay, it's an API issue. It's saying the yield of SRUSD is 0, which is highly unlikely. So that just needs to be updated. Yeah, so my daughter is coming into the office, but like RUSD, depositing it gives you a receipt token called DRUSD, which I call Dr. USD. That's going to qualify for protocol. She's taking a tent out of the office. Qualify for protocol own liquidity. So you'll be able to take your receipt token for depositing RUSD over to Infrared, presumably, and then get IBGT against it. So what you're doing is they're incentivizing providing deposit liquidity here. And also, Dolomite's token comes out in 2 days. Well, probably by the time this is live, the 24th. We're seeing a bunch of launches the 24th. EtherFi is doing their card thing the 24th. Dolomite's doing their token the 24th. Isn't there one more thing 24th?
Maybe. Those are the only two I'm aware of.
Allergies are killing me. It's a dang chance, man. They're trying to get me. Have you heard what they're saying? It's like allergies are getting so bad. They're like historically bad because I mean, blame the man, planted so many male trees to prevent like saplings or something on like the highway. So we have tons of male trees and all they do is like emit pollen.
Well, pollen's kind of, at least where pollen is, decreasing here. We're kind of like over the hump on the pollen season. So I think you're north of me. So, hopefully in a couple of weeks you will get that as well. Anyway, I have a question for you about all this Barchain stuff.
I'm
Boyko. Yes, you are very true sexist. Yeah. Boyko's ending in roughly 2 weeks. I think it ends on the 6th of May. There is a lot of liquidity that has been pent up in this, waiting to go find juicier yields. I know this because I'm partially in Boyko, and I'm looking forward to moving on and doing other stuff with my liquidity. I don't think I'll be sticking around Barchain just because I've moved on to stuff like the uni farming and other things. Unless they can do something that is exciting, my liquidity, for example, will probably leave, and I would imagine other people's liquidity will probably leave as well. That means that some of these positions, like the stuff on Dolomite, the rates will certainly shift. Pegs might get wonky. Volume might be high. I'm curious how you're positioning yourself for this. Are you planning on closing positions before Boyko ends? Are you planning on weathering the storm? Are you planning on trying to profit from it in some way? What are you going to do?
This is an excellent question that and there's a few ways to think about this. One is if you are worried about not being able to exit, you should probably consider de-risking ahead of time, right? Also, I just talked to the Dolomite team that sets a front-end bug. So my SRUSD is still getting yield. Thank goodness. I had a little bit of a heart attack there. They're just not showing the APR right now, which should be around 5.8. So it should still be a net positive carry, 15 to 20%, plus all the points. The thing that I anticipate happening, right, they had hundreds of millions of dollars deposited through Boyko, is that all of the borrow rates are going to skyrocket. So there are two ways to play this. One, if you are a borrower, you may want to consider, de-risking if you're scared of being locked into any of the borrowing and lending platforms on Barchain. But if you're a yield farmer, you might want to consider front-running this and depositing some of these assets are about to disappear. So like USDC, I think there's a ton of USDC from Boyko, USDT, Wrap Bitcoin, ETH, LBTC, EBTC. I don't know how like borrowed those are, what the utilization curves are looking at like that, but those are things that came through Boyko. Honey, even I think a lot of the stablecoins deposited were converted to Honey for Boyko. So all of those assets, if you just deposit ahead of time, or I mean even the day of, there's really no rush on this. Like you can just see what happens on the 5th. I think it's like Cinco de Mayo is when this happens. That's when we should see like the big change. Now, there's a chance that like there's no dramatic change, that like $350 million or however much it is being pulled out of lend-side liquidity all at once doesn't affect. I mean, it's definitely going to, but maybe it's a big nothing burger. Could be. At the same time, Dolomite's going to be incentivizing deposits, collateral through their like new Dolomite's token system. So like VE Dolo is going to get bribes from protocols to direct lend-side or to direct emissions to incentivize lend-side and liquidity and collateral. So I think you could be seeing the best of two worlds. Like one, crazy high supply rates just because of the utilization kinks shooting up for people who are like late to the game, and then two, potentially super high incentives from a brand new token that's like having a V tokenomics model that's heavily invested in Barchain. So I think like the way to play it would be consider de-risking your leverage, maybe, right? And that's one. I will probably do that, even though I love Dolomite, because I don't want to get locked in on a super high interest rate. And then two, consider lending. And you don't have to front run that. There's no reason to like get in early or else you're not gonna be able to lend. Like you can lend the day of. You can see if this is the case first. There's no reason to front run it. You can see if it's the case. And if it is the case, hey, maybe you're gonna squeeze up some 20%, 30%, 40% APRs for a couple of days as everyone sort of scrambles to react. So we'll see. That's my thesis. I don't know. What do you think? That's crazy? What do you think?
I think that's spot on. If I had positions open, actually I do have some Dolomite positions looping up LBTC. So I don't know what I'll do about that. Probably I'll close it. I think it's a good idea. The thing I'm definitely going to do is I'm definitely going to LP during this period. I think volume is going to go through the roof for the week of the Boyko thing. So like stuff, even like Honey USDC, Honey USDT, RUSD, Honey, any of the pairs that have actually like, useful like things going on, like the positions people want to liquidities can get pulled. So like I think that the move is probably to start in Kodiak with relatively tight pools and like eat up the fees, and then I think that actually
or go a little wide in like high fee tiers, because you might just see some like bounce through that thin liquidity.
There might be DPEGs. I mean, it depends on the asset, right? So like if it's something like RUSD, I bet the strategy you just said I think makes a ton of sense, like being relatively wide and being in a higher fee tier. If it's something that's just like a big like volume pair like Honey USDC, that probably makes sense to be super tight, because there will be deep liquidity and just like eat a ton of fees. So that's what my plan is. And then I bet you also stuff like Infrared also takes a big hit in terms of their TVL, because a lot of that's coming out as well. So like the BGT APRs may significantly increase as long as like, Barchain the token doesn't drop off a cliff.
It doesn't implode. Yeah.
So my plan is LP for that week, super tight, with the idea of potentially moving into stuff like, infrared BGT pools if I see a lot of liquidities coming out, which boost the APR up. So it'll be an interesting week. I'm going to be playing it for sure. Yeah.
I mean, how many it's billion? It's like $2 billion, isn't it?
I thought it was 3 billion, but massive amount of billions.
Maybe it's gone back up. Yeah, so it's literally billions of dollars of unlocked capital. Now, do you know, is it going to be unlocked on Barchain, or is it going to be unlocked on the chain that it was vaulted?
It's going to be unlocked on Barchain, and it's on the 6th. It's not Cinco de Mayo, it's on the 6th. So, we're getting very close to this now.
It's 6 de Mayo.
Yeah. So it'll be unlocked in Barchain. It'll probably be really painful to get off with the bridge. Stargaze will probably be doing, $1 billion of volume or something crazy like that. So these type of big, like, events in the market tend to lead to dislocations, and there might even be like
deep opportunities.
Exactly. And there might even be like DPEGs that you can profit on, where you're buying stuff at a cheap peg and then bridging it off and arbing it. So like I think there's going to be a whole swath of strategies, and it's big enough that I think it's worthwhile all of us paying attention to and seeing how we can profit from it.
People, man, I feel like there's so, I don't know, I'm not going to toot our own horn, but I like the fact that like at least we try to have actionable stuff. As my daughter comes in here asking for more 10 stuff. Okay, before we go, I do want to say Euler, Avalanche, incentive still going. Incentives end though. So if you are farming these, it was a 3-week incentive campaign. Rumor has it that they're going to continue this incentive campaign. So like right now, if you go over to borrow on Euler is like the main beneficiary of this for some reason. I don't think like anyone else got really any Avalanche incentives. Stablejack should get them. So like if you're following SAV, staked Avant USD on Stablejack, it should get incentives eventually. But like here, you're seeing 70% ROE, 45% ROE, pretty deep liquidity as well. And this isn't like royal incentives, which some people love, some people don't love. This is all in wrap AVAX. So it's like liquid incentives. You're farming them. Again, it was a 3-week campaign. I think we're 2 weeks deep. So, but rumor has it these may continue. All right, for the good of the order, any other interesting things that you've seen?
I think that's it. We think we covered quite a bit. Yeah. It's hopefully we see, I'm just going to end it with a bit of hopium. I mean, I hope you are right. I hope prices continue to appreciate on BTC and all these other assets. And I hope that leads to a bump in yields, and Barchain recovers, and all these other tokens are being used for incentives like R Royal and AVAX and all these things recover, and we get a nice little boost in yields. That would be a very nice spring surprise for us.
Absolutely. Well, guys, thank you so much for watching. And as always, have a wonderful rest of your